Hi, stock investors. JJ here. Welcome back. Well, is the AI boom already fading in terms of spending anyway? I'm going to react to this news clip right now that says exactly that. AI boom fading. Why IT spending data may not be adding up. So what's going on here? What is the assertion? Let's get into it.
So far, 2024 has been the year of AI, but is corporate IT spending reflecting that AI boom? Joining us now is John DiFucci, Guggenheim Senior Research Analyst. John, it's good to have you on the show. So you talk about, John, what you see as a new normal for software companies. Walk us through that, John. What do you mean by that?
Yeah, Josh, I think if we look back toward in recent history anyway, even go back 20 years, IT spending's been maybe 2 times or better than that of GDP growth. And software spending is probably better than IT spending. But over the last 2 years, we've seen software spending or IT spending be about what GDP growth has been. And why does that happen? People wonder why is that happening? Is it over? Is tech spending is that not gonna be a high growth area anymore? I don't think that's the case. I think what happened is we had COVID, right? A couple of years ago. We poured money into the economy. Our governments did. Our government, other governments in the world. We spent on IT to get everybody to be able to work remotely. Interest rates were negative, so people had a lot of money, and they ended up spending on a lot of things. They pulled it forward, right? They pulled it back to spend it back in 2021 on things that they would have spent 2-3 years later. So now we have this little bit of a gap. We don't need some of the things we already spent on. Doesn't mean IT is not going to be high growth. It doesn't mean software's not. It's still a great area to be in. But we have to work through this, and we're not done yet. And it doesn't. There was this hope we were going to get.
Okay, so I see what he's saying here, and it's easy to forget that because of this AI boom going on here. Nvidia has been going to the moon, and earnings have been blockbuster earnings from Nvidia and these other big IT companies. Well, IT companies really, Google and the mega cap big techs have been buying this equipment to get AI going. But I see what he's saying here. If we look at companies like Amazon, there were stories about how they were building out distribution centers there because things were pulled forward during COVID. People locked at home during the pandemic and people were buying online, and it did pull forward a lot of spending there. And people thought that the internet would be pulled forward a decade itself because people were spending quite a lot online, they're stuck at home, but that did pull back a little bit. So I see what he's saying here. He's saying that is related to AI as well, and software and all those things, but remains to be seen whether that's the case, whether AI can convert to earnings or whether there'll be a pullback. But he's saying that AI spending isn't particularly big.
Uptick in spending in the second half, we'll get an uptick. We always get a seasonal uptick, but it's not going to be the kind of year-over-year uptick that people had hoped for. Maybe it happens next year. Actually, it's unclear, but that's too far out. It's probably not going to happen in the second half, though.
Well, and John,
it's good that he's not projecting it that far ahead. Warren Buffett always says it's difficult to know what's going to happen in the next quarter, let alone in years' time. So it's good that he's not kind of projecting out too far there in terms of whether it's going to be good or not. He's saying we just don't know.
What was so fascinating to me about your recent report on all of this is that, of course, a lot of the expectations for that boost in software spending has been tied to AI. And you're among the voices that recently, including the folks over at Goldman Sachs, has been sort of questioning the AI narrative, both the timing, the magnitude, even maybe the existence of the huge lift that this sector is going to get. Can you walk us through that part of your thinking?
Yeah, there's been some conjecture out there that AI is the reason why IT spending isn't as robust as people would hope it would be. I don't think that's the case at all. There is spending on AI. And by the way, I believe AI is going to change the world. It's already changing the world, and it will change the world.
There's definitely been spending on AI. And if you just look at NVIDIA earnings, that's all based on AI. And their customers, their big tech customers have been buying up big. This race to expand data centers in particular. It's the data center business where really that's been building out this race to have the best LLM, the best AI in the years ahead.
That doesn't mean that all tech companies are going to be able to monetize that. It doesn't mean they're going to be able to charge for it. They're going to improve their
Okay.
products with AI technologies, and we're going to benefit. We are, all of us, the users. But are they going to be able to charge more for it beyond the uplift they get every year on renewal? I don't. A lot of them probably won't. Some
Well,
areas.
that's an interesting point there about will it translate? Will it translate to actual earnings for these companies here? Will there be an uptick in these companies that are spending on AI? Will it actually help them to make more money? So before we see the end of this clip, I want to tell you that I'm proud to say that I can bring you an offer, a special offer from ShareSite, which I will put in the pinned comment and in the description a link to that to go and see that special offer if you want to. If you don't know what ShareSite is, I'm going to play a short video, a pre-recorded video of what ShareSite is if you don't know already. ShareSite is an excellent portfolio tracking and reporting tool that takes the hassle out of managing your investments. Here's how it works. Simply import your trading history either from your broker or from a spreadsheet or manually. ShareSite organizes all your investments in one place, no matter where your assets live, so that you can track your true and total performance, including dividends, market prices, currency movements, and corporate actions such as dividends and share splits are automatically recorded going back up to 20 years and ongoing. To keep your portfolio up to date, you simply email your trade confirmations to ShareSite, or better yet, like I do, get your broker to do it, because ShareSite automatically updates your portfolio with the trades from your broker, so there's zero data entry required. ShareSite gives you an excellent view of your portfolio with capital gains, dividends, and currency fluctuations. It's easy to compare individual investments, identify any underperformers, and get a complete and accurate picture of your total returns. And ShareSite's detailed tax reports make your accountant's job really easy, saving you hundreds and even thousands of dollars in fees. You can access ShareSite from anywhere. Your data is protected by bank level security and always backed up and secure. You can get started today, now, by using my referral link. So really good portfolio tracking and reporting service that I use. I can highly recommend it. As I said, I'll put a link in the description and the pinned comment to the special offer for my viewers. Okay, let's get back to this interview. Let's see what they've got to say, what else he's got to say about it, about this IT spending. Is it not quite what it should be for AI or for the IT sector in particular, for tech?
Areas will, cloud vendors will, security vendors probably will, because even the bad guys will have a lot of AI, so there probably will be more attacks. Maybe some of the data preparers, data cleansers will, but that doesn't mean that every company is going to benefit from AI. And I don't think that what's happening out there today is because people are spending on AI, so they're not spending on other areas of tech. For the most part, that's
okay. See that name there, CrowdStrike. Just this past weekend, eventful weekend it was, with an outage that where really, and the CrowdStrike share price has gone way down, and there may be legal action there in terms of that. So anything can happen here.
that's not happening. The people spending on AI are AI companies. Some companies are spending on AI, but they're AI companies, and they're companies that want to provide AI for corporate consumers.
So, John, I'm curious, just giving your kind of broad views there. If you're an investor, you're listening right now, you want to commit capital to the software names. John, what would you suggest? What are some names you prefer here?
Yeah, Josh, I think if you think about where what names are set up well for the second half, there are usually some names that probably had some problems, so the numbers have come down already. For the most part, names
that include CrowdStrike. People are debating that at the moment, whether it's becoming a good buy. The multiples were pretty high for that stock.
They're a little too high. Numbers are too high, and they're probably going to come down for more than half of software names. Some names you can invest in now. A company like Okta. Okta's had a breach, or an incident, they call it, a little more than a year ago. Or actually, it's not a year ago. It was back in October. And now their numbers have come down quite a bit. But they're doing really well, and we think it could be one of the best software stocks over the next few years.
Okay, so we named a name there. By the way, this is not investment advice in any way. I'm not recommending stocks to buy or sell in any way. That includes CrowdStrike. Haven't really looked into it. So you need to do your own research, and this is just for entertainment and general education purposes.
Other company you can buy, think of what I just said. There is spending on AI. Who's benefiting from that today? Well, NVIDIA obviously is, but the cloud vendors are. And well, what cloud vendor may have an advantage in that if they can provide, think about it, you need a lot of data and you need a lot of compute. So all the cloud vendors are going to benefit. What if one of them provided performance at a lower cost, better performance at a lower cost? They might benefit even more. Well, that's Oracle. I think Oracle's our best idea right now.
Okay, so he's picking Oracle in terms of these cloud vendors. Of course, there's the big mega caps that have gone up. A lot of these names have gone back up. Software, has to be said, hasn't done particularly well because it's been seen that some could be disrupted by AI. It remains to be seen, but that even Google, people have been talking about that. As I said, it's not investment advice. What do you think? Let me know in the comments what you think about this, about, is the AI boom already fading in terms of spending, or is it going to go on for years yet? Let me know in the comments. Now, I'm going to put a link on screen to what YouTube thinks that you should watch next, based on your history and so forth. It's usually pretty good at picking. It might be one of mine, it might not be. And also put a subscribe link. It's a relatively new channel. If you want to see more of this, do subscribe, and I will see you in the next one.